Hello and welcome to Investing Confidential. Well, news is bleak. Debt default is imminent, supposedly. Debt default is probably the most searched phrase in Google right now. But what's really going on? I'm going to discuss this and give you some answers. I'm also going to address Nvidia, the big move today, whether it's real or not. But let's go on here. But if you watch my last video, it's not about the fake default. All what's going on in the world is not about this default. It's about the downgrade coming. And if you watch my last video, I said we're going to get a downgrade. And then all of a sudden, today you had Fitch and Morningstar put the US on the AAA on watch. Okay. And, nothing's making sense except that the markets, have been anticipating the Fed. This is why the markets aren't collapsing. They're not going up. They're not going up at all, but they're not going down a lot. If you look at a chart of the S&P, the S&P bottomed in October. We've had this bear. I still think it's a bear market rally. And they're waiting for the Fed to give them the green light to buy. Okay, no one wants to sell. Everyone's negative. Look here. You have a number of puts on ETF. This is all-time high. This is not professional. These are individuals and others who are using ETFs as a hedge, and the amount of puts on ETF is all-time high. That's again, I spoke about this a few weeks ago. There's too many people negative for the market to go significantly lower. Okay, big news today though was the GDP. Okay, they said it was better than expected. This was hogwash. Okay, absolute hogwash. If you look at the BLS statement on the GDP. Okay, let's look at it right now. As we look at this statement, here I point out, they talk about gross domestic product, corporate profits, et cetera, for the first quarter. What I'm pointing out here is if you look at what has driven the real GDP for the first quarter, consumer spending, I'm going to tell you why that's fake. You got exports, which don't tell you anything. And then you got federal government spending and state and local government spending. Now, they don't weight this, but I have a feeling that government stimulus is the lion's share of this GDP. And they also talk about non-residential fixed investment. Okay, that's obviously commercial real estate. None of this makes any sense. How could people be investing in non-residential fixed investments? Doesn't make any sense. And then you had the real things: decrease in private inventory. Okay, that means people are getting rid of inventory. There's no demand, so people are bringing down inventory. Then they talk about residential fixed investment as another drag. Okay, that's the bulk of real estate in this country. It's residential real estate, and it's having a problem. And then we got imports. Okay, why is imports important? We import everything. Okay, 90+% of things in Target and Walmart and all these stores are imported from China. So if imports are weak, what does that tell you about consumer demand? Okay, it doesn't make any sense. Now I'll go back to this consumer spending. This is credit cards. Okay, folks, this is credit. People are living off credit cards. Real consumer spending is negative. Consumer sentiment is plummeting. So for these morons to tell us that consumer spending is driving GDP, that's fake news, gentlemen. That's fake news. Okay, total fake news. Okay, so I don't want to hear about the BLS, the GDP. The White House can wave a flag, but this is ridiculous. But what's really interesting and what they try to bury here is what you're seeing here. Okay, they're seeing corporate profits in decline. This is the second quarter in a row, significant decline in corporate profits. Again, they tried to bury it with a higher than expected, higher than estimated GDP, which is bunk. Okay. But the real problem is we're seeing this in earnings. We're seeing this now with even the BLS, which is a total bias organization, telling us that the corporate profits have been in decline for some time. How does a market climb with no profits? It can't. Okay, as I told you, people from the market is driven by expectations of earnings, nothing else over the long term, or the medium to long term. So this market cannot go anywhere. Okay, but like anything else, how do we believe these numbers? They just came out and told us that there's been massive fraud in Massachusetts, one of the 3 states driving unemployment claims. Okay, so they're admitting that a lot of the data is fraudulent. Okay, can be misinterpreted. I mean, this is a joke. This is the United States, folks. This isn't Brazil. This isn't Russia. This isn't Venezuela. This is the United States. I mean, it's just a nightmare. Okay, and let's talk about this banking crisis. Okay, this is, as I told you, this is a fake crisis. There never was a banking crisis. We see here Western Alliance deposits were actually up. Okay, there was no reason to sell down the stock. There's no reason that the bottom line is, though, the U.S. has too many banks. Okay, as you can see here, way too many banks. We have more banks than anyone in the world. It makes no sense, especially in the days that we have this whole fintech revolution. There's going to be a lot of banks that are going to have to go, and they're probably most likely going to be acquired. But as far as the banking crisis, this was fake. This was nothing to do with a banking crisis. Everything to do with mismanagement. It's a sideshow to pressure the Fed. The Fed, I have to give the Fed they held up amongst this pressure. They didn't cave in and say we're going to cut rates, because that's all that Wall Street and the White House want. The politicians want rate cuts. Wall Street wants rate cuts, and the expectations now were for the third quarter. As you can see now, they're rolling over to 2024. I think they're wrong. I don't think the Fed's going to be able to cut rates in 2024, but the Fed is held up quite well to the pressure. I don't think they're going to raise, but the expectation is going to raise. But what we're setting up for is a big rally here, folks. I'm telling you right now, because the other thing here is, they have Yellen acting like Chicken Little, saying default, default, default. I mean, she's a disgrace. I mean, really. I mean, she's obviously a learned person, but she's acting like a complete moron since she's joined the White House. And Wall Street is supporting her efforts. Okay, UBS saying out here, market's going to go down 20%. There's going to be no default, folks. That's the bottom line. Okay, nothing. This is a nothing burger. This is nothing more than politics for 2024. Okay, but there is they're playing a game of chicken, and they're losing. Okay, because as you could see here, the real news today was Fitch, and then also Morningstar jumped in later in the day, basically saying the AAA rating, okay, was watched negative. That's almost like a downgrade. It's coming. Okay, what does this all mean? I mean, there is no debt default. Okay, again, as I told you, this is politics. It's backfired against the White House. The Fed has held strong, but there's a lot of pressure on the Fed. They're not going to raise any more after June. I mean, they may not even raise in June. If they raise 25, they're going to definitely indicate that there's no more raises coming, citing this, citing that, but no cut. Okay, at least for now. And why is there no cut? Because the Fed is seeing inflation. Okay, no one else wants to pay attention to it, and the Fed is finally. They've been a year behind the eight ball, and they see the inflation. Okay, there are many items coming down. Okay, here we go. Look at corn. Okay, corn goes into everything, unfortunately, and it's coming down. Copper. Okay, Dr. Copper, the growth of the global economy, having problems. Okay, other metals like steel, etc. They're all coming down. Okay, all lower. But then we have things like orange juice spiking. We got cattle futures, meat spiking. Okay, this is important. And as I mentioned, orange juice, a multi-decade high for orange juice. And then we have here New York City rents. Why am I showing this? New York City rents have a massive weight in the national index that all these so-called organizations that calculate inflation, they use as a part of it. So the fact that New York rents are not going down, they're actually going up, which doesn't make any sense either. The national rent index is probably not going to help the inflation numbers. And then you got Saudi, okay, issuing what they call a watch out warning. I don't know what that means, but basically Saudi has control of the oil price. We've lost control of the oil price, okay? Basically because we have sold down strategic oil reserves, okay? They've drained them down to 1983 levels. This is so bad. And by the way, as of a few weeks ago, they're still draining it. They're still draining it. And how stupid is this? A few months ago, they said they're going to stop buying back. which was a lie because they bought back nothing. This is a joke. And now they're still draining it. They're artificially trying to keep the price of oil down because of its impact on inflation. I mean, it's frightening. Okay, and but here's the real story. What the Fed's worried about here. This is what really, if you want to focus on one thing, watch this. Okay, real wages. Okay, wage inflation. This is a long-term chart. What this basically saying is inflation probably hasn't even. I mean, I'm not going to say it, but it looks like inflation hasn't spiked. But the bottom line is that these wages are going up and inflation cannot go down while these wages continue to go higher. Okay, this is a scary chart. Okay, especially for Wall Street and the White House, the current administration who wants a rate cut. They're not going to get it. Okay, so what's the result? We got mortgage rates 7%. We got real yields that you can see here going back to recent highs. I mean, this is bad. Okay, this is very bad. And I'm not even going to get into in this video about real estate because it's getting worse and worse. But so let me just mention something about Nvidia. Stock was up massively today. I guess it was the biggest increase in dollar market cap in the history of the markets. I think you've heard they basically positioned themselves with different kinds of chips for the cloud for AI, which is very smart. So they're getting away from the chips that go into iPhones, et cetera, going into these larger enterprise type of. So despite the weakness in semiconductors, and there is real weakness in semiconductors, there is some real interesting stuff going on. And this is real good management. They positioned this a couple of quarters ago. So it's not going to affect the future. They're positioning themselves because they think that demand is going to explode. This is a good allocation of capital, which is really goes into what I've been talking about. Picking stocks is the only way to go here. The markets are going to go nowhere. Okay, what we're seeing, the action we're seeing over the last 2 months is we're going to see probably for the next 5 years, up, down, going nowhere. But if you pick the right stocks where management is allocating capital correctly, you can make a lot of money. So we got inflation sticky, the Fed can't cut. We got finally calmed down to the fake banking crisis. Now we've got the debt ceiling crisis, which is going to go away. There is a definite big rally coming. I don't know how long it's going to last, but it's coming. People are short. Everyone's short. Everyone's negative. The market looks like it's going to go down. We have the Nasdaq up 2%. Everything else, the Dow was the S&P was up. Dow was down. Anyway, market's going nowhere. But once we get the debt thing settled, which will be settled, okay, in the next week or so, we've got the Fed coming out. We've got inflation indicators. All of this is going to point to a continued rally in this bear market rally. But then that's it. I think this is it for the bear. This is going to be the end of this bear market rally. And then you have to be very, very careful. Long-term investors, right now, as you can see here, you can get 7% on a T-bill. 7%. I don't think there's anything out there. These anomalies that happen once in a while, and this one is due to this concern over this fake debt crisis. Okay, you have to take advantage of this. Pile all your money. Okay, if you're going to be on the sidelines, take 99% of your money. You always have a little bit of cash. Put it into T-bills. 7%. Nothing's going to beat that, folks. Nothing. So that's my recommendation. Again, if you're a trader, continue to stay long into this craziness. It sounds crazy, but continue to stay long. But then be nimble and get out when you can. But as a long-term investor, you must be very careful out there.